Today I've got some exciting news to share with you, especially for Tesla fans in China. There are news going around. Elon Musk is expected to visit China once again, and I'm wondering what this could mean for the company. So like, subscribe, and let's dive in and explore the possibilities. So what's the reason behind this visit? Some people think it's to discuss the launch of Tesla's full self-driving, the FSD feature. Meanwhile, Tesla sales in China are looking good. The market share of gas and diesel cars are dropping fast, down over 50% in just few years. Tesla Model 3 is also seeing longer waiting time, now up to 4 to 6 weeks, and sales are strong. Look at the numbers. The market share of gas and diesel cars is falling, and this is causing problems for the companies that makes them. When you have a big market share, you can make a lot of parts and sell them easily, but when your market share drops, it's harder to make and sell those parts. This means Tesla and other electric companies are selling more cars, and that's good for them. We've been watching Tesla sales in China closely, and they're doing very well. The company is selling more Model 3s and more Model Ys. And people are willing to wait a few weeks to get the car. So as reported a few weeks ago, electric vehicle sales in China have surpassed gas car sales. The question is this at the expense of Tesla? Is Tesla failing? Apparently not. Currently, every single month, if you follow, you will see that Tesla's sales have been increasing. Elon Musk himself just said very recently that Tesla Giga Shanghai is at maximum capacity. You will also see that the Model 3 sees longer waiting time in China, and domestic sales are increasing as well. Consumers in Chinese domestic auto markets are starting to favor the re-engineered Tesla Model 3. Also, you can see in both the first week of Q4 numbers as well as the increased waiting time. Last week, we saw 16,200 vehicles registration ending September 8th, of which Model 3 has 6,400 of those. So if you look at the wait times, it's increased now to 4 to 6 weeks, and this is true for the base Model 3, the long-range all-wheel drive, and the top-tier Model 3 Performance. All of them are now 4 to 6 weeks. Tesla Chan does a great job of giving us the update, and this is what he said. Most leading vehicle notice in China. The Chinese are noticing that the Model 3 is the most leading vehicle in this industry. Yes, Tesla had a pretty rough first half of 2024 and certainly had a tough last year, 2023. But it's looking like Tesla got up and things are looking really good. Again, Tesla did it. Year to date, 2024 finally is exceeding last year. Just a little bit, but it's happening. Sales last week came in strong at 16,400 cars. The year to date now is 409,000, and normally Q3 and Q4 are much higher than the first two quarters. So look, Tesla is probably going to break the million for sure. Tesla's 2024 sales are now ahead of 2023 sales. We were a little bit behind, and now Tesla is popping back up. What's your expectation for the end of the year? Let me know in the comments below. I expect to see just a little bit better than last year, around 2 million maybe. We've seen a lot of expectations from extremes of the spectrum, thinking on one side it's going to be 2.5, maybe 3 million. And then on the other side, people say, no, it's dead, it's over. It's going to be 1 million. What are your thoughts about this? Let me know in the comments below. Now, the company is still growing, and I think what we're seeing, the reason there is no new factories, is because there is a pivot coming in a month and we cannot see it yet. On October 10th, we're going to learn something new that is going to reshape our expectations. And I think discussion of volume of sales of vehicle that human drive may seem quiet to us in even a few months' time, but definitely in a few years' time. Now, let's talk about Tesla's charging network. The company just announced that it's going to double the annual opening of its destination charges. This is a big deal because it means that Tesla is going to make it even easier for people to charge their cars on the go. Destination chargers are the ones that are installed at hotels, restaurants, and other places where people tend to stop for a while. I think this is a great move by Tesla because it's going to make its cars even more appealing to people who are thinking about buying an electric vehicle. And it's not about not just about the convenience of being able to charge your car on the go. It's also about the fact that Tesla is showing that it's committed to making EV a viable options for everyone. So what do you think about Tesla's decision to double its destination charger opening? Do you think it's a good move, or do you think the company should be focusing on something else? Let me know in the comments below. Finally, let's talk about the competition between Tesla and other electric vehicle manufacturers like NIO, like Li, XPeng, and many more. There are a lot of companies out there that are trying to compete with Tesla, but so far none of them have been able to match the company's success. I think one of the reasons for this is that Tesla has a big advantage when it comes to manufacturing capabilities. The company has been making EVs for a long time and it has developed a lot of expertise in this area. It's also been able to reduce its cost by scaling up production, which has made its cars more competitive in the market. But even though Tesla has this big advantage, I don't think it's invincible. There are a lot of other companies out there that are working hard to catch up, and some of them may eventually be able to give Tesla a run for its money. So what do you think about Tesla's competition? Do you think Tesla will be able to maintain its lead, or do you think another company will eventually surpass it? Let me know in the comments below. And now, ladies and gentlemen, let's take a look on Tesla's technical side, the chart. Tesla inside an uptrend channel. Look how this channel holds. Price of Tesla. We drew this channel a few weeks back and we are still holding inside it. Nothing changes. I don't change my analysis on each and every video. Now the 222.62 is the support, bullish on all time frames. This is how Tesla looks on the weekly. We are still inside the yellow zone, inside candle on the weekly. Once again, bears had their chance on Tesla to break down back to the 200 and maybe to the 177. They failed to do it. 212, very important area of support. Now let's see continuation, breaking above the 235, and we are heading north, 250 and 271. AVGO, as if previous week never happened. 15.9% to the downside previous week, first week of September, and then last week gained 22.4% on AVGO. Engulfing candle on AVGO, took the low, took also the high, next target 170, 170, and then back to the 185. This is how AVGO looks on the daily. Trend lines and Fibonacci, multi-time frames. This trend line holds the lower highs since the peak of June. Already 3 months of a downtrend, where the high of Friday went all the way and got rejected by this trend line with a doji. After this run, trend line and doji of a trend line might signal a trend reversal. 163 and 158 are the support. Netflix ended up the week 4.7% to the upside, holding strong. The 663 area is support. It was support over here. Now once again, support. On the daily, it broke this short-term downtrend channel, broke above the yellow zone, the daily yellow zone. Now 700 is the resistance on the daily for Netflix. Resistance since August 20th. Long continuation, and we will see 711 and 725 new all-time highs on Netflix. Netflix super bullish. Once again, thank you very much for watching this video. I do hope you find it helpful, educational. If so, like, subscribe, hit the notification bell, more videos coming up. And if you did not, let me know why not. Until the next video, stay safe.